Stocks are rebounding today after posting their biggest losses of the year yesterday. The Dow posting a 311-point gain. So do you buy into this turnaround Tuesday, or was this one giant head fake? Before we start this conversation, show of hands here on the desk. I'm just curious, who thought today's bounce was a head fake? Raise your hand.
Initially.
Wow.
Yeah.
Uh-oh. In fact, let's call it temporary Tuesday.
Yeah. Temporary bounce back Tuesday. Why was it so unbelievable?
Well, first of all, there was nothing structural that turned. And, policymakers didn't panic. By the way, we're not even sure what policymakers can do anymore. I think there's been an appropriate slight reassessment of what the Chinese are doing with their currency. But more importantly, look at bond markets. Look at the rest of the world. Look at the deflationary spiral is with us. In other words, if you thought that the bond move was an overshoot and treasuries, and by the way, on a trading perspective, we have had moments. I've said this in the last 2 or 3 weeks. I think treasuries are overbought, but the bond market should have told you something different.
Well, that's the thing, right? So you would have thought that. I mean, look at where the 10-year Treasury closed at 1.7, and we know that people were calling those 2016 lows generational lows. Like they're going back there, and maybe support at this point, but they're going back there. So what is the bond market telling you about growth versus the stock market that net is down less than 2% from, last week or something like that? To me, that's really the dangerous situation. And I just have always been of the mindset, I think guys with me here, that at this point in time, now that we are in a rate cutting cycle, it's a cycle. It may not be great for risk assets like equities right now.
Karen? I agree with what Tim said. Nothing new happened except the market did rebound. And when we think about turnaround Tuesday, we always think about, all right, down big. And then you start to see buyers saying, you know what, I know things are bad in the world. There's a lot of bearish stuff you can point to, but here's value. And I want to be out there and I want to buy. And then you see markets turn around. This started off strong, and it kind of, ended up the day stronger. I find this day so frustrating. Puts come in, right?
Right.
So I sold some puts in the morning. Of course, not enough. And then the longs are, okay, that's nice, but nothing's really different, and I think there wasn't enough panic.
Well, you buy some volatility, no? I mean, don't you roll
not
down?
Not yet. It's like 21.
It's elevated
too.
now,
Right.
I guess is the argument.
Yes. It's elevated,
but in terms of what we saw yesterday overnight, we saw a low on the Dow down more than 600. I mean, is it your inclination that you want to see us test that before we go high? I mean, is that some sort of significant level to you?
Well, I don't know if it's a significant level. I mean, I mentioned an S&P level, the 50% retracement of basically December low and the recent high, and I thought yesterday's close, we're about 4% away, and I'll stand by that. I still think we should see that. But one of the things I said last night is if you are bullish, and this is counterintuitive, you want the market to open in a crater-like fashion and then recover the rest of the day. We didn't see that today. So to Karen's point, it is a very frustrating day because as much as you want to be bullish and believe that yesterday was it just doesn't feel right.
All right. Well, let's bring in Chris Harvey, head of equity strategy at Wells Fargo Securities. Chris, good to see you.
Good to see you.
We couldn't see your hand, but your hand was up when I asked the traders if this was a head fake. So why do you think it was a head fake? And how do you trade this sort of market where you have these down moves and then you have these bounces that you don't want to buy ultimately?
So I think it was a little bit of a head fake because you're not oversold at this point in time. And what you've seen at the end of yesterday and of today, you saw passive flows come in. They ran the market up. But all the issues that we were talking about, whether it's rates, whether it's trade and tariff, whether it's the Fed, they're all still out there. And I think we just have to watch that out. And I agree with Guy. You wanted to see a down tape. You wanted to see that washed out. And then you can start to lift it going forward. We do, to Karen's point, we do find value. The yield on the S&P 500 is now above the 10-year. So every time you've seen that, longer term, there is opportunity. But in the short term, we do think that you'll probably pull back from here.
In terms of sectors, though, you do like semis, and that's been one sector that has been whipped around by all of these headlines.
Certainly. We've liked semis on and off, and obviously trade and tariff doesn't help the situation, but we find good value there, and we think that you can still make money to the long side in the semi space.
But, I mean, how would you characterize how you're positioned, though? I mean, I can't really figure out if you're defensive or you've got capital goods, diversified financials, food, beverage, and tobacco, and also semiconductors. It seems all over the map in terms of defensive, offensive.
We're pretty well diversified. So what we say, we run a model portfolio. That model portfolio is a high quality model portfolio, and it's quality at the right price. So we're involved in tech. We're involved in in software and financials, in consumer. But what we want to do is we want to find good balance sheets. And you can find good balance sheets in the semis, in a lot of the financials, in some of the cap goods as well.
How about around the world? What do you want to only be here, or what are you thinking?
So with quality, it does push us into the United States, but we are starting to find, on the value side, we're starting to find more and more value in the European sector. So we're being very cautious in that regard, but we are starting to find, at the margin, more opportunity in Europe.
Is there concern about Europe the more more China gets deeper and deeper into trade tensions and possibly the economy goes further and further south?
Absolutely. So if you look at the DAX, a significant portion of revenue from the DAX is supported by trade with China. A lot of that China trade is related to autos. And so as autos slow down, as tariffs come in, you're going to see that trade, you're going to see that occur. And what we saw in earnings season is autos globally, it's been and continues to be a very, very difficult spot.